Welcome back, everybody, to Life-Changing Wealth. You know who it is. Your boy, Jay Biondo here. I post 2 videos every day about investing in the stock market and cryptocurrency. If you like the content, give it a thumbs up, subscribe down below, and don't forget to hit that notification bell so you stay up to date with the latest videos. Now let's jump into it. So I got a real sweet topic for you today. We're going to talk about inflation, especially about all the inflation that's going on today, which is right at about 5%. We're at about a 5% inflation rate, which is very high. It's not crazy high, but it's still very high for the traditional United States. So let's talk about it. We're at a point now where, as you make your purchases, you start to see these things happen. As you go out and you buy your groceries, you're going to see your groceries are more expensive. You're going to see your gasoline rising because for more reasons than just inflation. But you're going to see things like home values. Home values up 25%. Really, everything is getting hyperinflated because good old Uncle Joe Biden says, "What's a few $1 trillion among friends?" Well, we're going to get into it. We're going to take a little deep dive. So the real question I have for you guys is inflation good or is inflation bad? At first, it might seem like it's bad, but we'll talk about how it could be good. So let's get right to it. So the first thing I want to show is the overall trend of the stock market. So here we are looking at the S&P 500 just over time. We're looking at it, from 2010. But if we go back and we just look at the monthly chart, you can see the stock market's just generally trends up with time. And so you're not necessarily competing exactly with the stock market when it comes to inflation, but I want you to think about that, because if you have your money in cash and you're not keeping up with what's going on in just the overall stock market, you're essentially losing money. If you have your money sitting in a bank account, they're giving you 0% interest, you are losing money every single day. If you have it in a checking account, that's even worse. If you have it in a money market, basically the banks are out there to screw you over anyway. That's the topic for another video, but you're certainly not keeping up with the overall rate of the market. And so now, just with that thought in mind, I want to essentially jump to more concrete data on what's happening. So typically, before we jump to this, the typical stock market rate of return is 10%. So if you're not getting 9 to 10%, you're not doing too well as far as keeping up with the overall market. So now that we jump into the next slide here, what I want to talk about is just Bitcoin right off the top, because it's a topic I talk about all the time, but I want to relate it towards inflation. So the way the current, monetary system works in the United States is whenever they want, they can just print more money to cover debts and things like that, right? Well, that has a ton of rippling, it has a big ripple effect throughout the economy. But when you compare it to, I guess when you think of money, you can't think of it like it's really a hard asset. It's not like gold, and even gold isn't a great asset because gold continues to get mined, right? And the supply of gold goes up about 2% every year. And when you look at Bitcoin, Bitcoin's a scarce asset. There's a limited supply of Bitcoin out there, and once it's all mined, that's it. That's all the Bitcoin that will ever exist. So you have to think about that. And then when you compare it to the US dollar, which is just going to continue to be inflationary, if you have your money in Bitcoin, it's going to hold its value. So when you have your money in dollars, automatically, if it's inflating, it's not going to hold its value. So that's just one thing to think about. And when we look back historically, the returns on Bitcoin here are, year over year, mean average annual return of 408%. So, that just gives you some differences between your typical bank account giving you 0%, the stock market, which I showed earlier, giving you around 9 to 10% on average, and then look at the new asset class, Bitcoin, bringing in a spanking 408% return. You do have to keep in mind, though, now as Bitcoin matures, there will be diminishing returns, so you can't expect that. But it's awfully interesting. It's awfully interesting to think about that if you pretty much just hold Bitcoin, you're going to do much better than inflation because you have a scarce asset. So I wanted to show that. Another thing, I want to jump to really the some more data. So on Trading Economics, they show that we are now at the 5.4% inflation rate. During the Trump days, we were down here at 1.2. And Joe Biden has now printed like $3 trillion into the economy. When you look at the overall M2 money supply, M1 money supply, which, by the way, the data has been discontinued. They don't show you how much money is actually circulating out there anymore. But in the past, it's gone up dramatically. It's gone up almost like 25% in the past year. So if not higher, I could be wrong about that, but it's a very high number. So the inflation rate now we're looking at 5.4 on the chart. So if we switch over to the bond rates, okay, you have to look at the overall bond rates in the market. So there's a reason for this, which is if I go out and I buy a 30-year note right now, 30-year risk-free bond from the U.S. government, they'll pay me 2% a year for the next 30 years. That doesn't even keep up with the inflation rate. That gives me a negative yield of 3% a year. That is horrible. But that's what Uncle Sam is willing to do for you. Look at these atrocious rates for a 3-year bond from the Treasury at 0.77%. I mean, this is not 1 year, 0.12%. Atrocious. So when you think of the U.S. bond market, it's basically non-existent. There's no reason to even consider being in, I shouldn't say there's no reason, but there's little to no reason being in these negative interest yielding bonds that exist. So I just want to give that as another baseline. So we'll go to the next point, right, which is now, most U.S. workers' real wages have really barely budged in decades. So if we go to the chart, this kind of stops at 2018, but the buying power has not gone up at all. And if we look further, this is what I really wanted to get to here, is that where the wages have gone up in the United States is only really in the top 90th percentile of earners. So the wage growth is only happening in the top 10% of wage income earners, and people at the bottom not seeing much growth. So that's really unfortunate. And then the last point I wanted to bring home is the real averaged hourly earnings. Right now, we're looking at a negative like 1.7% annual reduction in pay since June. So this is some of the atrocity that our economy is seeing. It drives me totally nuts, to say the least. But that's where we are today. That's the unfortunate thing of the current inflationary state of the U.S. economy. So that's what I wanted to leave you with for now. Don't forget to check out the other videos from today and from days past for more investment content like this. Subscribe down below. Let's get about 2,000 likes on this bitch. Hit that notification bell, and see you in the next video.